Good day, fellow investors. If you look at Ford stock, it hasn't gone anywhere and is actually a little bit down over the last year compared to the market that's up 44%. And that's why I want to look at Ford, because Ford is an indication of reality, while the market is a little bit exuberant. For those who don't know me, my name is Sven Karlin. Here we do value investing, core long-term value investing for compounding. Subscribe and like for more. And if we look at Ford, there is always building, of course, cars, iconic names, and now they are also expanding into electric vehicles. That's not really successful, but let's see what's going on, what's plaguing the company, why the stock isn't really moving. For now, we see cash flows. Those are there year to date, 6 billion. That is not bad, especially when you compare it to the market cap of 44 billion. So 44 billion, 6, that's a 15 almost percent free cash flow yield. Compared to the market's 3%, Ford should be 5x. But the market isn't liking something, so yes, EBIT is a little bit less, free cash flows are okay, earnings per share are still there for a P ratio that is below 10. And yes, the issue is the Ford Model E, but who would expect that you go sell electric cars when this is what you made your brand on? That's something very interesting, and we have to discuss it also for other businesses, and that's the new thing syndrome. Think of it how it impacts management. So now we have a revolution, electric cars, and if we don't invest 50 billion into that, like everyone else is doing, if electric cars are the big thing, then we lose out. But if we invest 50 billion and we lose 5 billion per year, then okay, everybody was doing it, we had to do it. And that was 2 years ago. What is everyone investing now that I have to invest because everyone else is doing, but we don't know what the results will be? AI. So there are always these cycles. It was blockchain 4 years ago. Every conference call, blockchain, 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 then electric cars, lithium, whatever. Now AI, AI, AI. And that's the new thing syndrome, that if you're a manager, you cannot say no, because if then it happens and it is something, you get fired and then everyone gets excited. But it's costing Ford a few billions a year. Anyway, if we look at the cash flow and balance, this is what really hit me. They have a lot of cash, and if I look at the debt balance sheet, 20 billion. Is that just that? 20 billion, high liquidity, high company cash balances. Everything looks good. 20 billion debt? We just discussed Volkswagen with 300 billion of debt. A little bit different. Interesting. The guidance there for 2024 a little bit weakened as the retail is weakening, etc. But perhaps something that best explains the cyclicality of the automotive industry and what the market is seeing, the reality check with Ford, is this presentation from Martin Zimmerman, who was a chief financial officer at Ford before the financial crisis in 2007. And here he explains in a little description how does the auto industry work. So a good year industry sales is 15 million units, and a severe recession year is 13 million units. So a drop from 15 to 13 million, a little over 15%, is really the difference between decent performance and severe losses, with a lot of job relocation or job distraction, I might add. And that is exactly what's going on. The market is playing the market game with the Magnificent Seven, with the AIs, but it's giving you a reality check with Ford. No recession ahead, but maybe not in the next 6 months. If there is a recession, like Druckenmiller and everyone is saying, end 2025, exactly because no one is expecting it, then Ford's numbers that now look good, the 5 billion cash flows, look terrible, and they lose 5 billion from electric cars, 5 billion from everyone else's car, and that's 10 billion. And that's a huge hit. Yes, there is cash, they can survive it, but it looks even uglier than now. And I think that's exactly what the market is saying now. So if you look at these not hot stocks, you can get a glimpse of reality. So if there is a recession, Ford goes down. If not, maybe it creeps up 50%, but it is still in a highly competitive automotive industry. There are issues, costs, always something, and the return on capital over the cycles is not that great. Therefore, yes, you might collect the dividends over time, maybe play on those cycles, because if the economy gets well, Ford should do well and increase sales a little bit, just improve the numbers a little bit, and this will be a $15, $20 stock. So you can play if you know the cycle. Thanks for watching. I'll see you in the next video.